If you're new to trading, you'll probably notice it can get pretty wild. You see prices move, you jump in, and then bam, the market changes. You're losing money. It's easy to get confused, wondering why making consistent profits seems so difficult. That's why in this video I'm going to show you a simple way to trade with the trend using the smooth cloud indicator. This tool helps you quickly see where the market is headed. You'll learn how to get those moves and avoid fighting the market. Basically, we're going to make trading less of guessing game and more something you can actually do well. Here's something a lot of traders struggle with, and you might be too. You're probably trading against the trend without even knowing it. Now, if you're thinking, what's a trend? Don't worry, we'll cover that. Basically, the trend just shows you general direction of the market is moving, and I'm going to show you a really helpful tool to see those trends clearly. The indicator uses a special calculation based on super smoother filter to show you the trend. It displays three lines, a fast line, a mid line, and a slow line. These lines work together to create what looks like a cloud on your chart. So if you want to see in this action, it's pretty simple. If you're using TradingView, just go to the indicator section. Type in smooth cloud and then enter. Then in the results, choose the one by Big Beluga. You'll see those color cloud appears and you'll start to see trend much more clearly. Okay, let's really dig into how the smooth cloud indicator works step by step so you understand exactly what it's showing you. First, you pull up the indicator settings. You'll see the inputs tab. The length setting, when you change it to 45, that's controlling how much the indicator smooth out the price data. A lower number reacts faster to price changes, but shows more noise. A higher number like 45 reduces the noise, giving you a clearer view of the trend without lagging too much. It's about finding the balance. Then we've got the source set to HL2. That's just a simple calculation that takes the high price for each period added to the low price and divided by 2. This gives you a middle ground price, which is more balanced than just using the close. It avoids giving too much weight to any extreme highs or lows. Next, the colors. Green for uptrends and red for downtrends. This is purely visual, but it's important. It makes it instantly clear which way the market is moving, no guessing. Finally, the style tab. We turn off all the extra stuff like buy or sell signals, labels, and tables. You don't need those. They clutter the chart. All you need is the color cloud itself. It gives you a clean, uncluttered view of the trend. Alright, so you've got the smooth cloud on your chart, all set up. Now, what does it do actually? Well, it's pretty straightforward. First, you're looking for the color of the cloud. If it's green, that's telling you the market's generally moving up. And to confirm that, check where the price is compared to the cloud. If the price is above the green cloud, that's a stronger signal that you're in an uptrend. You're seeing those three lines within the cloud. They're showing that the price has been constantly moving upwards. Now, let's flip that. If the cloud turns red, that's your signal for a downtrend. And just like before, you want to see the price below the red cloud. That confirms that the market's heading south. Again, those lines inside the cloud, they're showing the price has been steadily dropping. Alright, so we've got the smooth cloud telling us a trend, right? Now, to actually get it into a trade, we're going to use trend lines. It's a real simple way to find good entries. Okay, let's really break down this trend lines entry strategy using the smooth cloud step by step so it's crystal clear. First, you're looking at your chart. You've got the smooth cloud indicator. If it's showing green cloud with the price above it, that tells you the market is on an uptrend. So, you want to trade with the uptrend. Now you don't just buy right away. You wait for the price to pull back a bit. This pullback or dip is a normal part of an uptrend. It's the market's taking a breather before continuing its move up. You'll often see the pullback comes down towards the green smooth cloud. Once you see that pullback happening, you grab your trend line tool. Specifically, you want to connect the high points of that pullback. Those high points are called swing highs. When you connect them, you'll see a trend line that's sloping down. This trend line represents the corrective move, the brief period where the price is moving against the main uptrend. Next, we're watching for a breakout. You want to see a candle closes above that downward sloping trend line you just drew. A candle closing above it means the price is breaking out of that corrective move and it's likely to resume its uptrend. That's your buy signal. For risk management, you'll need a stop loss. You place your stop loss just below the lowest point of that pullback, the swing low. That limits your potential losses if the price doesn't go as expected. Finally, you need a profit target. A good rule of thumb is to aim for a profit target that's 1.5 times the distance between your entry price and your stop loss. This gives a reasonable risk-to-reward ratio. Right, so for sell trades, it's the opposite of what we just covered for buys. We're looking for a red smoothed cloud with the price below it, indicating a downtrend. Then wait for price to rally up a bit, a pullback. Draw a trend line connecting the low points of the pullback. When a candle closes below that trend line, that's your sell signal. Place your stop loss just above the highest point of that pullback and aim for a profit target 1.5 times the distance from your entry to your stop loss. So there you have it, your ticket to riding the market's wave with confidence.